HMRC's new AI isn't after millionaires, it's after you. They aren't just chasing oligarchs, and they're definitely not chasing deputy PMs. They're scanning TikTok, Insta, and even your videos of packing Etsy orders. With platforms like eBay and PayPal now reporting your income directly, their AI tool is linking the data, so your side hustle is now all it takes to put you on the radar. In this video, I'm going to show you exactly how HMRC is using AI to catch people, the hidden traps like gifts and freebies most creators don't even realize are taxable, and what you need to do today to stay safe. Let's start with the most important thing you need to know right now. HMRC has officially confirmed they're monitoring social media to track down undeclared income. In a public statement just weeks ago, HMRC's Director of Compliance openly admitted, "We look at people's social media. If someone's on TikTok or Instagram showing off a lifestyle or business activity that doesn't match their tax return, that's a red flag." So what does that mean in real life? Well, if you're posting a day in the life of an Etsy seller videos, bragging on TikTok about a new whip, or posting stories about hitting 6 figures, but on your tax return, you've declared 18k profit and claimed the flat rate mileage. For you, it's content. For HMRC, it's evidence. Because here's the reality. HMRC isn't just waiting politely for you to send in a neat little return. They've built their own surveillance system. It's called Connect, and it hoovers up 55 billion data points from more than 30 sources. Bank accounts, PayPal, Stripe, DVLA, land registry, even your Airbnb bookings. Think of it like Big Brother but worse, because not only does it watch you, it judges you, compares you, and quietly builds a case against you before you even realise it. And unlike your mum, they don't need to ask nicely to see what you've been up to. Since 2021, they've even had the power to bypass tribunals and force banks to hand over your info with a financial institution notice. No court order, no warning, just ping straight into their system. What's more, platforms like eBay, Etsy, Vinted, Airbnb and PayPal now report your earnings directly to HMRC. So there's no more wishful thinking or slipping under that £1,000 trading allowance, just hoping for the best. In fact, they already know well before you hit the withdraw button. Keep in mind, it's not just algorithms though, because old school tactics are still in play, such as tip-offs, and HMRC paid over $850,000 to informants last year alone. And even Google Street View has been known to give someone up 3 cars on the drive but declaring minimum wage raises more than an eyebrow. Now, to be fair, the investigations are still signed off by humans. That's why HMRC has been busy. Last year, they were recruiting an extra 5,000 compliance officers. That's roughly a 10% jump in staff just since the start of 2024. And up until today's date, they've actually doubled that section. But here's the catch. More staff means more cases to chase. And MPs are already worried about false positives. For example, say you get tagged in your cousin's photos from Marbella. You didn't pay for the villa, you didn't even go. But now HMRC's AI thinks you're living it up in Spain while declaring 20k a year. Suddenly, you're explaining someone else's Aperol Spritz bill. It's about ordinary people who don't even realise they've done something wrong until HMRC drops a penalty, or more commonly, a nudge letter through their letterbox, giving 30 days to explain yourself. And the bottom line, HMRC isn't just looking at your tax return anymore. They're looking at you. And if your lifestyle doesn't match your declared income, expect a very different kind of DM. If you sell a few things online or you're a new creator, you're about to hear the biggest mistake you can make. It's thinking you're safe under the trading allowance, because crossing that line could land you with a huge fine. The £1,000 trading allowance is not a magic shield. If you've ever thought, well, I only made 800 quid on Etsy, so I'm safe. Or worse, I get £1,000 allowance on Etsy, another 1,000 on Depop, another 1,000 on TikTok. Listen carefully. The £1,000 allowance is total across all of your self-employed income. Cross it even by £1 and you must register for self-assessment and declare it. And HMRC doesn't care whether you made £200 profit or £20 profit. They look at gross income, the full amount that came in. This includes Etsy, eBay, Vinted or Depop sales. It includes TikTok Shop or Creator Fund payouts. It includes freelance work paid through PayPal. It includes affiliate income, sponsorships, brand deals or paid collaborations, and also selling digital downloads on Gumroad or Ko-fi. But let's be clear, not everything counts. If you're selling your old sofa or used clothes, that's personal, it's not trading. Birthday money from your nan? Definitely not taxable. PAYE wages from your job? Already taxed. Dividends or savings interest? Different rules apply. So when does tax actually kick in? Well, only once you've calculated your profit, which is what's left after expenses. And that's where most people massively overpay, because if you don't know what you can claim, from home office costs to software to postage, you'll pay tax on money you've never really kept. It was already paid out. That's why we've made full guides on claimable expenses. I'll link them below so you can legally cut your tax bill before you hand a single penny to HMRC. And here's the twist almost nobody sees coming. Tax doesn't just apply to cash. Ever been given a free meal for posting a review, a free hotel stay, or even a product worth £200 to show off on TikTok? Well, HMRC considers that taxable income. Anything from goods and services to crypto. And stick around, because in the next section I'll show you exactly how those freebies can come back to bite you. Imagine this. You didn't make a sale, you didn't get paid. You just opened your DMs and saw, hey, we'd love to send you some free skincare in exchange for a post. And you think, brilliant, free stuff. HMRC thinks that's income. It's called barter income. HMRC doesn't actually care if you got cash, credit or free stuff. If you got something in return for content, it's income and needs reporting. And here are some common examples of gifts that HMRC sees as income. And if any of these look familiar, it might be time to check your records. So a hotel gives you a 2-night stay in exchange for posting content. The market value of the stay is taxable income. Or you're a personal trainer who gets free supplements from a brand you're promoting. That's taxable income. A brand sends you a £200 gadget and asks you to film a review. That's taxable at the full value of the product. You get free clothing and you post a haul with links. Well, if there was an expectation you'd post, it counts as income, even if there was no contract. Let's say a PR agency sends you a product with no obligation, but you post about it anyway. That's still potentially taxable if it creates value for the sender. HMRC's test is simple. Did you receive something in exchange for publicity or promotion? If yes, that's income and it needs to be declared properly to keep you compliant and off their radar. So at this point, you might be thinking, okay, I've earned something, now what? How do I declare it without getting it wrong or accidentally triggering an audit? Well, let's walk through this step by step. Whether you made $1,200 on Etsy or got a free hotel stay worth $300, here's how to declare it the right way. Step 1, register for self-assessment. If you're not already registered, head to gov.uk/register for self-assessment and sign up as self-employed. The link's in the description. You'll need to do this by the 5th of October after the year in which you started earning, as the deadline is the following 31st of January and there's a penalty for not registering by this date. Once you're registered, HMRC will issue you with a UTR number, so that's short for Unique Taxpayer Reference, which is a 10-digit number, and they'll send it to you by post. and you'll be able to then file your tax return online. Step 2, track your income by platform. Now, it's crucial to separate and label where your income is coming from and what it is exactly. For example, the platform might be TikTok Shop and it might be product sales of 420, whereas another 300 might be barter income that was a gift hotel stay. Separate these on a spreadsheet, and we've got a free one you can use, the link's in the description, or in bookkeeping software like Free Agent, Xero or QuickBooks. This way, what you're saying matches exactly what HMRC sees too, and especially now that most of these platforms report your income directly to them under the Platform Operators Reporting Regulations. This will become really important as Making Tax Digital for sole traders kicks off from the 5th of April 2026. Check out our video giving all the details of Making Tax Digital changes coming in April 2026 and share it with someone else you know that might be in a similar situation. Hit subscribe for regular tips and updates, or get in touch with the link given if you want to chat to one of our team about your situation specifically. Then we've got step 3, track and deduct your expenses. Now, this is the part that really protects your profit and lowers your tax bill, so pay close attention. You can deduct any costs that are wholly and exclusively for your business, including materials, packaging ingredients, supplies, platform fees, Etsy, Stripe fees, etc., software tools, Canva, CapCut, Shopify, postage and shipping, phone and internet proportionately, home office expenses, portion of your energy bills, rent, etc., equipment, camera, laptop, lighting, often through annual investment allowance. There's so much there. The more accurate your expense tracking, the more tax efficient your return will be. Don't guess, keep receipts or digital records for absolutely everything so that you don't pay more tax than you should. And if you're still unsure, have a look at our other videos specifically covering expenses, or even better, get in touch with our free discovery call, which you can find in the description. Then we've got step 4, file your return even if you don't owe tax. This is one of the most common mistakes people make. They assume, well, I only made £400 profits, I don't need to do anything. You need to file a return if your gross income was over £1,000, even if your expenses brought it down to nothing, because if you don't, HMRC will, and the figures may be hugely different, resulting in a tax bill you shouldn't actually have had. And filing late or not filing at all is what triggers penalties. So even if you don't owe tax, make sure you file the paperwork. So, income over 1,000, register and file. No tax to pay? Great, still file. Profit over the personal allowance? Make sure you file, but also time to pay. And what about those so-called free gifts or services you received? How do you declare those properly? Well, you treat it just like any other income. Step 1, log the value. Use the retail price or fair market value at the time you received it. Step 2, record the context. If there was a contract or agreement, even via email or DM, save a copy for your records. Step 3, add it to your self-employed income in your self-assessment tax return. And step 4, if you're VAT registered and the value is over the VAT threshold for that transaction, you may need to account for VAT too, even on a non-cash payment. Now, if all of this has you panicking, take a breath. It's not too late to get it all right. Even if you've never filed a return before, even if the money's already spent, right now is the best time to fix it, especially before HMRC contacts you. Because once they've sent the letter, you're not correcting a mistake anymore. You're explaining why you didn't act sooner. The reward for fixing it now? A quick top-up payment and you move on with your life. Leave it and you're in full-blown investigation mode with HMRC camped out in your inbox for years. You've got 2 ways to clean this up, and which one you use depends on your situation. Option 1 is the Digital Disclosure Service, DDS. You use this if you've never declared the income at all. Maybe you had a side hustle on Etsy, TikTok Shop or PayPal and you didn't register. Maybe you got gifted items and sponsorships that you've never put through. If HMRC doesn't know about it and it's not on any return, DDS is the tool to bring it in cleanly. It's basically saying, hands up, I missed this, here are the numbers. Option 2 is amend a past return. Now, if you did file, but you just forgot something small like a few affiliate payouts or a gifted product, you don't need to go through DDS. Instead, log into your HMRC account and amend that return directly. You can normally do this for the last 12 months, and it's quicker if it's just a top up rather than a full confession. Think of it like this: DDS is for the big misses, the stuff you never told HMRC about. Amendments for the slip ups where most of it's already declared. Plus, we've got a couple of shorts specifically on how to do those, which are worth checking out if this is you. If you've spotted a gap, fix it now. It's not too late, and it'll cost you far less financially and emotionally than waiting for that brown envelope to arrive.